Hi traders and welcome to the daily recap show for today's US session, which was Thursday the 3rd of November. Hope you're finding these reports useful and valuable to your trading. If you haven't already, please come join the Keyzone service. The link is in the box below on our YouTube channel. It's completely free to sign up and you get to come and be part of the Keyzone traders community as well. So we're going to look at today's markets, the S&P to start with. These were the zones of reference. We said that the market had sold off after FOMC announcement yesterday, and we had resistance now at 37.55 to 37.65. We said all the time we're below there, we can see, and if we saw sustained breaks below 37.12 to 37.20, then we could see see moves lower. So let's go and have a look at the S&P today. Okay, so this is the action. You can see we opened up here and right on that support zone at 37.12 to 37.20, and we got the really strong push down, but notice we then got the very strong push back up, and there was no, when we retested this zone, if this candle here had broken down, then that could have been considered a continuation pattern. We could have headed lower, but it didn't, and we actually ended up pushing back higher. That suggests that this is a false break. It's a V pattern. Notice that the strength of the buy-in back above the zone was as strong as the sell. We then came back down, and we actually got a really nice continuation pattern here, which pushed us higher. We came back, we retested, we got a reversal pattern here again on retest, having taken out the liquidity of that previous bounce, and then that has pushed higher again as well. Other than that, not really too much to talk about on the S&P. Nothing from any of the trade locations, or nothing from we wasn't looking for trade locations from this minor zone here, but a couple of smaller opportunities there. They're not super high probability, but they're certainly valid, having seen that false break pattern early on in the session. So that's the S&P. Now let's go and take a look at the Dow. Okay, so these were the zones of reference on the Dow Jones. We said that the market had sold off again from the FOMC, and we now had resistance at 32,150 to 32,200. All the time below there, if we saw sustained breaks below 31,825 to 31,875, then we could see lower. So let's go and have a look at the Dow today. Okay, so some sort of fairly similar action to the S&P. We got this really strong push down below that 31,825, 31,875 zone, but again, we got a very strong push back above there. Continuation pattern not as strong on this one, so this is not one I would take. I certainly prefer the signal on the S&P, and it also, again, the pullback here, we got the reversal. However, we hadn't taken out liquidity, so again, although this is a reversal pattern, the one on the S&P was a higher probability setup, and that would be the one that I would be looking to take from these markets. That said, we have pushed higher in on the Dow and actually got a really nice reversal pattern from that resistance zone at 32,150 to 32,200 there. So that was really probably the trade of the day on the Dow. We have continued to use this zone as resistance, but nothing really high probability here for me in terms of setups. And likewise, we have held this zone on the retest, but nothing, I wasn't looking for a trade location from there. And again, nothing really in terms of a real high probability setup. So this trade here, this one here is the trade of the day for me on the Dow, and although there was a couple of signals on the Dow here, these definitely are not high probability. I would not be taking these ones in isolation, but actually having seen them alongside the S&P ones would be more high probability anyway, and those would be the ones that I'd be focusing on because they happen around similar times. So once again, I hope you find these reports useful. A couple of really good opportunities there on the US markets today. Please let me know how you're getting on, and I'll speak to you soon. Cheers.